With Scott Bauer, CEO of Applied Trading Academy. How are you approaching your example trade for this one, Scott?
Cautiously, you're looking at the technicals, and they're a bit rough to really read. But we have seen a series of lower lows, lower highs. I do expect them to beat on earnings, but I think that there is going to be some let's call it cloudiness in guidance, maybe some cautionary guidance here. I mean, George was just talking about China. So I think there's a lot really up in the air. So based on that, I am buying what's called a diagonal put spread. It is a bearish trade. I am selling this week's 172.5 put. So that is about $15 or so below where we're trading. And I'm buying next week's 180 strike put. I'm going to try and do that for about $2. Now, if AMAT reports, a good release, guidance is good, stock stays here, goes up, okay, my loss is limited to what I pay. This is definitely a bearish trade, and I'm looking to just kind of extend this out for a week from today, or a week from tomorrow, really.
Okay. So EPS estimates are 11%, sales growth of 6%. To your point about what George Sillis had been sort of outlining there about a few things that they have to address on the guidance. I mean, what metrics will you be paying attention to the most as far as how traders should be looking at this one?
I think that's all going to come down to the buzzword tariff and what they see and what may happen with China, and that is what, to me, is really the cautionary part of this. With 3-month extension in trade talks or the tariff timeline here, I'm not sure how AMAT can come out and really give a proper guidance or a really guidance that we could possibly buy into, because there's so much uncertainty. So metrics in terms of sales units, I don't know that that's going to make a difference. I think it's going to be all what they say about tariffs, China, and the guidance.
Okay, got it. That's a quick snapshot of AMAT. What are your thoughts on the broader market today? Because it seemed like Tuesday was a bit of an everything rally. Yesterday was a bit of an old rotation day. And today we are on the back foot, but only marginally, suffice to say. I mean, the Nasdaq's pretty much just flat to the downside, but the Russell 2K very much underperforming. You and I were talking about some of that breadth yesterday. What are your thoughts today off the back of that PPI report?
I was just talking to some of my fellow traders about this, and it seems right now that we're in a Teflon market. I mean, that number today, that PPI number today was so hot, not just a tiny miss. It was a really hot number. And what you're seeing it reflected in is in the Russell, in those small caps, those stocks that are most sensitive to interest rate changes. Now, it's really interesting because end of the day yesterday, the CME FedWatch tool basically pricing in 100% probability of a interest rate cut in September. That's gone down just a little bit. It's about 94% now, but it's going past that. It's the October and the December meetings. That's where we see the shift. That's where we see the change today, that the expectation is not as high as it was just yesterday. So that's why you're seeing the Russell really getting hit here. To me, this really brings on more concern of what we were talking about yesterday, that the back half of this year, we may really start seeing some of those tariff implications hitting the consumer.
Okay, that is certainly something to watch. Scott Bauer, always a pleasure. Thanks for joining us today. CEO of Applied Trading Academy, joining us there.